All right. So today we're going to work through the problem 13.2b on page 495, and this particular problem deals with a treasury stock and preparation of retained earnings and stockholders' equity. Just to review, treasury stock is stock that you're buying back from the market and it's owned by the company. Company cannot have a gain or loss on their own treasury stock, nor can they declare dividends to the treasury stock because that would be considered a conflict of interest. So on page 495, we have Balsys Corporation reports the following components of stockholders' equity on December 31st, 2018. What we have common stock, $1 par value, 320,000 shares authorized, 200,000 shares issued and outstanding. When I see 200 shares issued and outstanding, when that number is the same, that means there's no treasury stock at this point, because 200 been, out there on the market, issued and outstanding. If issued and outstanding number different, that means we own some treasury stock. Now, authorized shares, it's a maximum company can sell. It doesn't mean they sold all of them. Another question came up from a student through email before. 320 authorized, that 200 is part of that 320. It's not an addition to, out of that 320, 200 being sold. So 120 still have never been sold ever for the company. So vocabulary is very important here. We have paid in capital in excess of par common stock, 1.4 million. We have beginning retained earnings, 2.160, and we have a total stockholders equity. So I'm not going to read through entries. I usually like when I do those problems, jump to requirements. This way I know what I'm looking for in a problem. So I've been required to prepare journal entries to record each of those transactions. So January 10, I purchased 40,000 shares of its own stock at $12 cash per share. So me buying my own stock by definition is a treasury stock. And this happened on January 10th. You guys can follow along and write this out. That would be great. Okay, so we have treasury stock. I'm going to abbreviate as TS, common. And I pay cash for it. They won't take anything else. So 40,000, you can see my little formula here going, times 12. 480,000, my debits equal my credits. Now I have my own treasury stock sitting on the books. So I'm going to create two little T accounts here, guys, just to get my point across. So this is my treasury stock common. So after this entry, right, my treasury stock common, I just increased it. So because treasury stock stays in the equity section, right, in the equity section, treasury stock do actually reduce your owner's equity stock, but we'll get to it when we do prepare statements, but just something to keep in mind. All right. On March 2nd, directors declared $1.50 per share cash dividend payable on March 31st to the March 15th stockholder record. So remember how I said the conflict of interest to pay dividends to our own self. So remember we had 200,000 shares and 40,000 we bought back. So this is number of shares outstanding, right? So let's just kind of keep tab of it. Number of shares outstanding. So we started out with 200,000. I'm missing a zero there. But I just bought 40,000 of treasury stock, right? So this is number of shares, right? You're kind of going to keep a total of it somewhere on the side. So when I'm going to issue my dividends, I cannot pay dividends to my own self. So I'm paying dividends only on 160,000. So keep that in mind, right? So When I pay my dividends on the day of declaration, I don't necessarily write a check. What I do, I reduce my retained earnings. And I will have common stock dividend payable. And I'm going to do this for 160 shares because I cannot pay myself dividends. It's not 200 anymore, it's 160. So I'm going to take 160,000 times $1.50. So it's going to be $240,000. All right. So I'm going to write here and comment this way, guys. It helps you out. Declare $50 dividend on 160,000 outstanding shares. And we know how I got that number, right? Here, in case you're joining us a little bit later, we have purchased treasury stock, and we did 40,000 times $12. Let me know what happened. All right. Now, on March 31st, we're going to pay the dividends. So we've been told direct declared payable on March 31st to March 15th stockholder of record. So I'm assuming nothing changed because we nothing happened until the 31st. So paid the dividend declared on March 2nd. On March 31st, I'm going to pay them. So all I'm going to do, I'm going to take common stock dividend payable, and I'm going to pay cash. It's a cash dividend. The same amount. All right, so we just paid dividends. We've been doing those before. Now, on November 11, I sold 24 of its treasury shares at $13 per share. So remember, I bought them at 12. Now I'm selling them at $13. Let's see how this plays out. When I do my entries for this, I usually like to do cash first because I know that one there has no paid in capital or anything. So when I sell something, I'm obviously getting money, right? So cash, and I'm gonna take 24,000 times 13. So I know how much cash I get. That part is not hard. The other part a little bit tricky. We always book a treasury stock that we sold at the price we originally bought them at. So we're going to take treasury stock common, right? And we're going to decrease that amount, that 24,000 shares. At the original price, we purchased $12. Okay. If it would be formula, it would be great. Okay, so 288,000. You say, well, that's great, Miss Labrisi. You just credited something, so let's make sure we post it. Let's post it. Just make sure we know what we have left. There we go. And my debits don't equal my credits, so that's not good. Sorry, my mouse is jumping around and you guys with that. So I need my debits to equal my credits. So I got so much cash, and this is the cost. So I have 24,000. I cannot recognize gain. Remember, I said we cannot have gain when we sell our own treasury stock. So what we do, we put it into paid in capital access of treasury stock. So we're gonna put the excess off, and we did not sell all of our stocks that we bought 40,000, so we might need that money later. Paid in. Okay, and I'm gonna create another T account for that because I'm gonna need it. So how do we make this a little bit smaller? Hopefully you guys can still see it. And I'm gonna put this account in here. And I want to keep track what is in that account, and you guys will see later on why. So paid in capital treasury stock 24,000. So right here, I am going to post that. So I just post I'm not posting my cash because I know I don't have to do financial statements later. So, I mean, theoretically, you'll be posting to all of your ledger accounts. That would be true. My iTunes wants to play. But I'm just taking accounts that I need for the purpose of this exercise. I also want to update how many shares outstanding because I know I have 24,000, right? I just throw back on the market, so I'm going to add it back in. So now I have 184,000 outstanding after that day, right? So as a result, I sold some of my treasury stock and I have paid in capital. I sold it over the price, $1 more for 24 shares. Let's write a description here, just make sure we know what we did. All right. Any questions so far, guys? Besides my unruly iTunes jumping around, it's okay. He was gonna keep everybody awake. All right. This is not debit or credit. This is just a description, right? Here. All right. On November 25th, I sold 16,000 of treasury stock at $9.50 per share. Again, I'm going to do my cash first. Remember how I said cash is the easiest one? So for cash, I'm going to take my $9.50, and then I have 16,000 shares. So it's 152, right? I'm going to skip a couple lines. You might not know you need to do that, but I do. And I'm going to write down my treasury stock at a price I originally bought it at. So I'm going to take my 16,000 shares and I have to reduce them exactly the price I bought them at $12, right? 192,000. Well, we definitely can see we're missing debits here, right? Because my debits need to equal credits. So right there, I'm going to post this right here right away. And if you guys watch this, right, 16,000 shares, boom, right here, 16,000 shares. I just sold all of them. So I don't have any more treasury stock left. So if you add those two numbers together, it's zero, right? So they're all sold. So I lost money, but I cannot have a loss on my income statement. So where do I go? Your first place to go, you can exhaust all your paid in capital treasury stock. Remember, I sold it for more, for $13. So this is the first place I'm going to go. I'm going to grab everything I have for my paid capital treasury stock. So I'm going to grab everything I have to help me out here, right? Because now after that, I don't have any treasury stock left, and I'm going to post this right here. So now this account is zero. So I sold all my treasury stock. I used all my paid in capital to give me gain before. I have nowhere else to go. What do I do? My debits don't equal my credits. By how much? I'm going to take 192 minus 152 minus my 24 I had. I'm still short 16,000. So I have nowhere to go. And in this case, I cannot recognize gain or loss on my net income. So we're going to book this directly to retained earnings. It goes directly to retained earnings. When you sold your treasury stock, all of it, the lot itself. If you have not, you would continue maintaining paid-in capital, and when you sold all of them, you would equal this out. But we call it lot. From this particular lot, we sold all of them. We cannot be in a negative treasury stock because there's no future sales. We're going to go after retained earnings and reduce our retained earnings in this case. And this is a reissuing treasury stock. 950. Any questions, guys? So far, a lot of stuff going on here. Watch your entries, make sure debits equal your credits, right? All right, I'm gonna keep going if there's no questions. I'm seeing nothing in chat. Luke would mention it to me. All right. Now, what happens on December 1st? December 1st, directors declared $2.50 per share cash dividend payable on January 2nd as of December 10, stockholder of equity. Well, we're not going to go back to 160 we did here before, right? Look what's happening here. After November 25th, we're back to 200,000 shareholders. Therefore, all of them, because it's in the market, will get the dividends. So on December 1st, we're going to declare dividends, the same thing we did before. We're going to reduce our retained earnings. And in this case, I'm going to take 200,000 times 250. I know it's 500,000, but I'm still going to put a formula in here. And it's going to be dividend payable. Common stock dividend payable in the future day. And that future day is happens to be January 2nd, but we're not doing January 2nd entry, so we have to leave it like that. And on December 31st, we closed income summary to retain earnings. So we all know it's kind of fast forward. Remember, when we close revenue, we close expenses, then we close everything to income summary, and income summary get closed into owner's equity. In this case, close to retain earnings. So what we do, we're going to debit income summary and increase our retained earnings. I know already I'm going to need retained earnings. So either in Connect or your workbook might not have T accounts. I love T accounts and I set them up on the site like I did here. This way I know what's going on. So that's kind of a little tool for you. So we closed income summary account. All right. Wow, there's a lot of things happen here. All right. So before I move to part 2, any questions on journal entries? We all good? All right. All right. So the second part is asking us to prepare a statement of retained earnings. So any good financial statement must have name of a company, statement it's for, and time frame it's for. So we're doing part 2. Just want to make sure you guys are all there. Oh, you guys having your own discussion going here. Luke, you okay to managing that?
Oh, my bad. I missed that actually.
Okay. Okay, everybody's good here. I'm kind of going back. Okay, we're good. Okay, because I just see Excel when I'm working through it. Okay. All right, just double check, make sure everybody okay there. All right. All right. So we start out with the name of a company, and it's a statement of and for year 31st, 2019. All right, so we're going to do statement of return. This is the same thing we done before a statement of owner's equity or statement of partnership equity. Statement of retained earnings is the same format. So we're going to start out with the retained earnings in the beginning of the year. And my retained earnings doesn't look like I spelled it right. Got it. Okay, so my retained earnings in December 31st, 2018, if I look at my page 495, we can see your beginning retained earnings, right? 2,160,000 it's given to us. So now we just like, when you get to the portion when you prepare financial information, you are gathering stuff. It's a gathering type. So you just have to know where to go and what to get where to get information. So this is a beginning balance. So we have 2,160,123. Let's see. I might be off on the 0 there. Really good. Okay, then we're gonna add a net income. I can do multi account, but we don't have that much happen. So my net income, I just booked it right back in my journal entries at 1,072,000. So that increases my retained earnings. And my subtotal here, my subtotal between beginning and net income is $3,232,000. Now, let's look at our deductions. What things to reduce my retained earnings? My cash dividend. You can have a stock dividend too, but in this case, we just had cash dividend. So I have cash dividends declared. And let's talk a little bit about that. Even though one of them I did not pay, I already declared them and I already decreased my retained earnings. So my first cash dividend, right, I already paid, right here, I declared it. But see, when I reduce my retained earnings. But this particular one, right, 500,000, I haven't paid for it yet, but I already reduced my retained earnings. It belongs to that year. So we count that. Remember, in accrual base of accounting, we count for things when they occur, not when they actually paid. So you're going to take 240 plus 500,000, right? Plus 500,000. And that's your dividends for the year. And then we have one more reduction. Remember the treasury stock, we sold it for less and we bought it in total between all 40,000 shares. So treasury stock reissuance resulted in additional 16,000 negative. So that was right here, guys. Remember that was 16,000. So I'm actually gonna enter this in a negative number so I can do formula later. Yeah, it doesn't need to be, it's fine. So 16,000, you can enter this in negative format. Okay, so that's it. This is only things that I'm gonna decrease it. So just because I put them in a positive, I put less here, that means I'll be subtracting them. And you guys see that in a second. This is it. This is all we have on our retained earnings. So my retained earnings, somehow I lost my side here. And the end of the year, I'm going to change the day here, 19, is my all increases minus my decreases, like dividends decrease it, and in this case, treasury reissuance. You can have treasury reissuance increasing your retained earnings. That's possible too. In this case, we had a decrease. So right here, you have a statement of retained earnings. I'm going to let you guys catch up writing it down.
Where were you getting the treasury stock reissuance number?
Okay, that came from this entry for November 25th when we had to reduce our retained earnings because when we sold it for $950, we had nowhere else to go.
All right. Okay, I see
Right
now.
here, she said. Guys, make sure you understand every number where it's coming from. That's the whole goal of you guys, like, going through this and making sure that you can process it. All right, I'm gonna go to part 3. So it's the same name of a company, different name of the statement. This says our stockholders' equity section of balance sheet. So it's in essence partial balance sheet, just that part though. I did not mean to be all capital, so we're going to change that. And this is interesting part. I'm going to point this out. Did you guys see this how for the year ended December 31st? Because this gets closed and starts all over again. We're saying for this particular time frame. But when we deal with balance sheet, if you remember, guys, from accounting 1, we say it's a snapshot of the time that we do this. So I just take a picture as of this day. So we actually say as of December 31st, 2019. We don't say it's for a certain period. On that day, this is what the equity is. So that part is kind of interesting. All right. So what do we have in stockholder equity? All common stock, all treasury stock, preferred stock, paid in capital, retained earnings. So in here, we just have what we have, right? So what we have, I'm going to abbreviate a little bit. We have common stock. Actually, now I'm going to write it out, but it's going to be long though. Common stock, $1 par value. We still have 320,000 shares. Authorized. That did not change. We did not sell new shares. I'm going to start a new line, but it's the same description. Remember how we went back to 200 shares? So if I would have to do financial statements somewhere in the middle here, I would have only 160 outstanding. So I would say 200 issued, 160 outstanding. But in this case, I went back to having 200 shares, 200,000 shares. Issued and outstanding. So $1 par times 200 shares is $200,000. Okay. Now my paid in capital, because I did not issue any additional shares. I played with treasury shares, but I did not issue any other common shares. It would be the same as my beginning of the year. I did not, if I go in here, I did not book anything here to paid in capital, right? So here I would have a paid in capital excess of par of common stock. I'm going to make a little space of line so you guys can see it better. And this stays the same as we had before. So we have 1,400,000. And then I have my retained earnings I just calculated, right, from part 2. Not use the beginning one. So I have my retained earnings I just calculated right here, guys. You're looking at my cursor. 2,476,000. So this brings my total stockholders' equity. And I'm adding everything up. There's no decrease. So treasury stock would decrease my treasury stock would decrease my stockholders' equity, but I don't have any, so I can just add everything up. But otherwise, it would be the case. All right, so that's part 3. This is my stockholders' equity, and we are done with this problem. So I'm going to stop the recording, and then we'll see if you guys have any more questions, but hopefully you can reference this recording later.